My name is Alex Ronsis, Executive Director of Fintechs Canada. With me today are James Muhato and Jonah Chininga of Woveo. James, Jonah, thank you for being here with us and welcome.
Thank you. Yeah, thank you for having us.
Thanks, Alex.
Tell me a bit about yourselves, your personal stories. How did we get here?
Oh, that's awesome. Yeah, I can start out. James Muhato, originally immigrated from Kenya and was fortunate enough to attend the University of Prince Edward Island as an international student. I guess the precipice of Woveo was in appreciating the international student journey of that being an immigrant settling in Canada, but also appreciating the barriers and challenges that may exist as well in terms of settling and integrating into the system. And Woveo was kind of that avenue to really express ourselves in terms of providing a tool that served immigrants in one, being able to bridge into Canada's financial system, but also access the tools and utilities to build better lives. And yeah, so going through the journey of lived experiences really was a motivation in terms of how can we be creative in addressing a challenge that we faced, as youth and now into our working lives as well.
Awesome. You said Kenya. I hope you can appreciate the Kenyan endurance runner right up there. Jonah, how about you?
Yeah, my name is Jonah Chininga, born in Zambia, raised in Zimbabwe. I came to Canada in 2014 to do my studies at UPI. Did that from 2014 to 2018. And that was my experience as an immigrant. But I think, my experience in terms of like the financial ecosystem is really tied from my life experiences. Being raised in Zimbabwe with the hyperinflation, the worst hyperinflation ever recorded. I've always been around alternative financing mechanism. So that's where my passion comes from. And then, just brought that to Canada. I was fortunate enough to be able to engage with the United Nations and the World Bank in 2019, where we're looking at alternative financing mechanisms that we can be able to use to accelerate credit access for immigrants and newcomers. So from that research, that's how I ended up being involved with this work.
Awesome. The connection is very clear. Let's take a step back. What is Woveo? Why the name? What does it mean?
Yeah. So Woveo, it's inspired by a woven tapestry. So how interconnected a woven tapestry is. So there was a lot of correlation and inspiration with our product, which is a community financing product. So really that name and that inspiration resonated with the messaging and the mission that we have as a company.
My wallet is made of leather and some sort of hard synthetic material that holds my cards. What's a community wallet?
So I can take that. The community wallet was our interpretation of the modern implementation of a rotating savings and credit system, and really enhancing that system with technology as an underlying layer to really provide new age or new world benefits to it. And this model is something that's practiced in all our countries. So one thing that really brought us together, even as a founding team, was understanding how in each of our different countries, communities would mobilize and support themselves around financial activity. And so I'm from Kenya, it's called Chamas. Jonah is from Zimbabwe, it has the name of it, so Stockville as well. And with Colombia, it's called Chitty Funds. Tandas. So having that commonality of understanding that this is a system that exists globally, there's a very clear cultural affinity and familiarity. How do we translate that into the modern world? So the Woveo community wallet is the interpretation of that. And like a community savings and loan system, the repayment history is what we use to allow people to build credit history. So by reporting that to our credit bureau partners, as people are able to, one, mobilize their resources and access the funds, repayment allows us to build that credit for them.
Yeah, and then also I can add, so like you mentioned, right, I have my wallet, it's leather, so it's your personal wallet, and then for a community, it's a community wallet, and an interesting story also from like a regulatory perspective. Our goal was how can we enable communities, especially new immigrant communities, to create virtual like credit unions, but you can't use the word credit union without the actual structure of a credit union. So community wallet really resonated. How can we provide a community a wallet that they can be able to use to enhance their own financial security and build community wealth? So that's kind of like our own interpretation of a community wallet.
So Woveo offers a community wallet. You said a rotating savings product. You know the subreddit, explain it to me like I'm five.
Yeah.
What is a rotating savings model? Explain it to me like I'm five.
So it's an alternative credit and savings system that really dominantly is community focused. So where a group of individuals are able to, within your network, pull your funds or your resources and each take turns accessing this lump sum. Funny story, that's how we started Woveo in the heydays. We wanted a way to keep each other committed to how we like starting the business, and we decided as co-founders, okay, we'll every 2 weeks, let's put something together, whatever the total comes to, can we attain a financial goal with it? And so the individual benefits to us was you're able to access this interest-free capital that you can now dictate and use towards a financial goal or outcome. And now with the layers of technology, we're able to provide this as information to help you build your credit, and also automating the processes to provide a layer of credit risk protection for the other members. And that we found was really how we can accelerate this model to really galvanize communities towards financial outcomes or goals that they desire.
Yeah. And then also, just to add to what James mentioned, so through a rotating savings mechanism, it's a community savings and loan system whereby socially connected individuals come together and pool funds. So on a monthly or bi-weekly basis, everyone contributes a fixed amount, and then that is redistributed to one individual on a rotational basis to the other members. So let's say we have a group of 10, and then each person is contributing $100 into this pool. So we have $1,000 that is given to one person within the community group, and then that rotates over the next month, over the following months, to be able to enable people to get access to a lump sum without any interest fees. So it's more of like a decentralized, accessible mechanism that people use to be able to gain access to credit. Usually I call it like a mini bank, right? People are pulling their own funds and leveraging them as a credit facility.
You mentioned that the credit is distributed based on whose turn it is to receive the funds. How is it determined who receives what, how much, and when? Is it like a fixed rotation? Is it needs based? Tell me a bit more about that.
Okay, usually, when these communities, or when you come together as a community, this is where you'd agree. So between your members, or let's say the three of us on the call, all say we would like to contribute a certain amount every so often. So let's say it's $10. Oh, it's $100 every 2 weeks. That's $300 between the three of us. And we, as a group as well, will decide who should receive the funds based on needs. So it's really self-directed based on the community or the group itself having an intention for this financing, or an intention for the reason for pooling of funds, then allocating that based on needs. Then the factor of how much is being pooled is basically a factor of the number of individuals, how often the amount is being pooled, and are we receiving it, or who would be receiving it in that frequency. And so that would be the structure. It's very self-governed and self-directed, really to tailor suit the use cases that each community has, but really mobilizing individuals to provide for this utility.
So it's really flexible. So we could come together and decide amongst ourselves that we're going to create a rainy day fund. We're all going to contribute to it. And then let's say one day rain does fall and I find out my basement is flooding because there's like a crack in the foundation or something. I can come and say, guys, I really need to pull funds to fix this. It's a disaster. And based on the terms that we've agreed to, I would or would not be able to access the funds.
Yeah, no, so there are two options. So the first one is like the group is typically pre-scheduled on a fixed term basis, and then people create the group based on like priorities and goals. So for someone, they might decide to use the group as a forced saving mechanism to like, oh, hey, I want to support my community, but then also at the same time, it's a forced saving mechanism because it improves my savings goals from an accountability perspective. But then now, if someone has an emergency during the group life cycle, they can exchange positions. So really, it's kind of like working to the financial security of the group, of like, hey, I'm supposed to get the payout this month, but then you do have a financial emergency, you can be able to access this lump sum and then repay it back over the group life cycle. So that's kind of like how it's more of like an insurance product to the group members.
Are there any eligibility criteria for joining the community wallet and using it?
So usually, everything for Woveo starts with community, and that's how we built out the product, because we understand that every group or individual that's come together have different use cases for it. So one, having a community and understanding that we have a specific financial goal would say the topmost criteria for joining Woveo. Beyond that, it's really relying on the KYC and AML, really the industry-led criteria that we use to really, one, understand who our customers are, which members are being included to our communities, and then from there being able to provide that protection and assurance to the community leaders themselves or the members, that when you are interacting with these individuals, adding them to your groups and agreeing to contribute towards this common goal, that they are who they say they are. We have done the due diligence to confirm that you are in yourself protected as well. So really aiming to be low barriers to entry, but really focusing on, okay, how do we manage that compliance process once you're in the system?
Right. Can you guys share any success stories of new Canadians who have benefited from these services and really improved their financial situations?
Oh yeah. So this is it's a very exciting question, because we went back and forth with it on Jonah before. So yeah, we have two use cases that we love to highlight. One is that in our early years, we were able to work with international students out of Atlantic Canada. And this was a perfect relationship in our mind between us as an innovative technology, our credit union partner, and also the educational institution that we were working with at this time. And so for some context, fourth-year international students in general don't get access to student loans. And in this case, it was something that was a barrier towards them graduating and, in a sense, living out their better, brighter future. So with our information and our relationship with the credit union, we were able to provide the payout or the payment history based off Woveo to the credit union as alternative data. And so when they were running their checks as well, using our information to show, one, that community affinity, that ability to, one, keep to a schedule of disciplined savings or disciplined payments, was evidence that was almost allowed to be accepted to allow these individuals to receive that international student support. This allowed them to graduate, to now be employed, and almost really feeds into that good case that the community came together to support this individual towards that journey. And that's one that we're very proud of, because these were students just like us. It's a very relatable journey. And the second one is with the Whole Women's Network out of Ontario. So this is a group of immigrant women that come together to support each other, specifically around financial, but also household expenses and expenditures. With the Whole Women's Network, they had traditionally been doing this on their own system analog. And for us, was to see what would it mean if they were to translate a formerly informal system to something more formal, more structured. To date, the excitement has been that they've been able to develop from smaller groups contributing maybe or saving the $100 to now groups that are saving around the $500 mark and trusting each other. Similar to the utility to why they've been why they've a really good case study or a really good example is that the use case for how they've been using their groups was very specific to cover specific either business expenses and buying inventory, or towards specific household costs with the rising cost of household expenditures. And equally, as an organization themselves, having this formalized structure allowed them to really transition from being a community-led organization without really formal structuring to now becoming a cooperative. And we love to think that we played a role in providing a bit of that formality and transition to allow them to become established, but also formalized in their own right.
And then just to add to James as well, I think across the board, 4 use cases that we're seeing is one, people creating groups as a way to be able to build credit, so a credit building program that people can utilize as a groups. Second is also around business financing. So most new immigrants are very entrepreneurial, but then they have the biggest challenge is accessing credit and capital. So for some of them, especially we have like mom and pop shops, they're using this alternative financing to be able to finance their businesses, but then also at the same time now with data, they can be able to be plugged into the ecosystem. The third one, which is interesting, is how people pool funds to be able to access that home payment mortgage. Right now, to save for a mortgage typically takes a Canadian 17 years, right? So people, by pulling this, they're able to access a lump sum much earlier and then be able to purchase their home dream, and then providing that access to home ownership. So those are like three different use cases that we're seeing across the board. From an international student perspective, I think one that I found really interesting was an international students coming together to be able to use the rotating savings system for a housing deposit. That's actually one barrier around student housing, especially if you're an international student. You're required to bring about, if you're staying in Toronto, $3,000 for first and last month's rent. But as a student, it's harder to be able to come up with that capital. So leveraging this ecosystem to be able to plan your goals ahead, but then also leverage the community to gain access to non-interest credit is really empowering to the individuals to be able to reach their goals.
I feel like you guys have been getting at this in your answers to all the previous questions. What are some of the key things that differentiate the kind of credit you guys offer through your community wallet and the credit that's offered through a traditional loan?
So honestly, I guess it's the best utility or the best use case. So answering the question directly, it's one, it comes from your community, so it's almost at no interest. You're borrowing from your social network and repaying it based on the schedule and routine that you've agreed to as a social network or as a community. The second one is it's based around, or the support, incentives, or motivations for you to contribute back to them are also socially tied. So there's that engagement with your community, then knowing the outcome is, it's tied to a benefit beyond you yourself. There is a benefit to your other community members in terms of how they will use the money and how it will expand their network and resources as well. And the third thing we're seeing, and this is really, I think, more for individuals who have used the system for the longer, more habitual side of things, in that the benefit not only allows them to, one, access capital or credit from their community, but leveraging that for external or growth opportunities that are financially geared as well. So in the case would be the Whole Women's Network. So you start collaborating on these minor, smaller financial goals, and with time and where we aim to plug in with broader access to capital is now you're able to drive that entrepreneurship within the community. You're able to drive the non-for-profit or maybe community-based initiatives that have been tied or have been formerly very capital intensive. They've all of a sudden become really feasible. So one, providing interest-free capital to individuals, one, providing them a mechanism that is conducive for repayment, but also culturally or community incentivized to benefit everyone. And third is providing a very clear, direct pathway to grow your financial capacity.
And also, I think one also, which is very important, I think from a traditional perspective, it's the relationship-based lending model. So at the foundation, right, what is a bank? A bank is a system that pulls a community or community's capital, and then they have underwriting models that they use to be able to decide who accesses this credit. So they have like underwriting models and risk-adjusted models that be able to assess creditworthiness, whereby alternatively, these are more relationship-based lending models, whereby the community is coming like, let's leverage our own savings as our own credit facilities so that we can enhance financial security, so that we can enhance our building community wealth. And our story really is tied. I always like to use the story of how the credit unions movement was started in Canada or globally, right? It was the essence of like, how can we provide that banking pillar or financial security pillar of the community by leveraging, that's the story for Desjardins, how it was started. It's also funny when we met with one of our regulators in PEI, telling us the story of how the first credit union in Atlantic Canada was started for providing access to credit and capital to fishermen, agricultural farmers, who the banks considered that they were not a good target market for them. So like, that's how we see, like, how can we now enable any community to be able to have this community wallet that can enable them to have financial security and then gain access to affordable credit through a relationship-based lending mechanism.
It sounds like there are so many advantages here. If community wallets are a superior alternative for many segments of the population to more traditional loans, why do so many Canadians still rely on predatory lenders?
Yeah. Yeah, no, that's a great question. I think one, there's a cultural aspect of it, whereby like this model is very prevalent in emerging markets, whereby it's everything is more community driven. Whereby in Canada we're still basically like more individualistic financial products within our ecosystem. Our products are more individualistic focused. So I think there's an education gap and awareness around this, how these products can be used. But I think once we get to a point where like you can be able to access credit whenever you need it, I think that's the reason why people use predatory products. Like, okay, hey, I need a loan today. Where can I get it? That's why someone end up using Easy Financial. So really being innovative around the community wallet, like, okay, someone needs capital today. How can they get it? And then are they credit worthy to be able to access that capital is something that we're consistently thinking about. So that's one thing that we identify from an opportunity perspective, but then also just kind of like trying to leverage the community wallet as a mechanism as an alternative mechanism for credit access.
Yeah, and also maybe just to add a bit of that, it does really, because our vision and our mission is really to provide communities and members of communities with that financial security. It coming from your social network really allows you to, one, feed the mandate of, maybe your personal ambitions, but also combined with the ambitions or the prospects of the community. And literacy or financial literacy around access has been one thing we've touched on as well. So making sure that people understand, okay, these are the options that are available. And these options should also spread beyond the banks, but also to credit unions and cooperatives that offer different rates that may be a bit more favorable. So putting that out there, but emphasizing that, as Woveo, financial security and access to these products is at the utmost value that we are able to provide, making sure that the community network, you have access to this based on the information.
And then also, I just wanted to also add, because I think from a predatory lending product, I also think there's a fundamental problem in the Canadian ecosystem. That's the reason why people end up using predatory products. We need to look at the foundation. I think Canada has one of the highest cost of capital among the G7 nations. Canadians are using most of their income to service debt. So when you look at like how did we end up here, right, whereby like people are relying on mostly these predatory products to bridge their financial goals, is because most of our income now is now going just to servicing debt. We end up living paycheck to paycheck. So whenever we have an emergency, we don't have access to that emergency fund. So I think there's a crucial role that we can be able to play, not only in just servicing newcomers, but then also servicing an everyday Canadian to be like, okay, this is a model that can enhance your financial security from that perspective, from a community perspective, really reducing the cost of capital. I think some cases that we are seeing is interesting, whereby people use a rotating savings mechanism. They get access to a lump sum and they pay debt. They do debt consolidation, because this is more of like a non-interest free loan that you can be able to use to pay an 18% credit card debt that you have. And then that way you'll be able to be debt free, which is everyone's dream in Canada.
I'm partial to more cultural explanations of why things are the way they are. I mean, it's easy to say, oh, if our institutions were drawn up in a particular way, or if we just decided one day to wake up and change our behavior, everything would be good. But to some extent, and not fully, but to some extent, the way we behave and what our institutions look like are a byproduct of the cultural parameters within which they emerge. You alluded to culture. What do you think it is about the Canadian psyche that maybe makes us a little slow to adopt what seem to us like new solutions, but solutions that have existed around the world for a long time?
If I can jump in, I think comfort, or being in a comfortable position really does. When something works in one way and has worked in that way for a period of time, it does build in these legacy habits and legacy tendencies that tend to be passed on. And really, if I was to build on Jonah's point from the previous statement of, the utility of this is that you can use this to pay off debt. So it makes it applicable to all Canadians. And when we go through our exercises talking to other immigrants, we understand other immigrants coming to Canada. And by the way, this is from all across, like all immigrant communities. This similar model exists in their different markets or in their different cultures. When you're now coming to North America, its understanding is, are the tools that are available feeding the purpose of that they're supposed to? Are they meeting their utility? I think having those legacy systems that have for so long being able to run and have served the general public for so long, moving away from that and needing to show value is a big stepping point. People tend to be more risk averse if what you're giving them doesn't have evidence of or demonstrated evidence of success. And so I think that's one hang up we always get is, okay, understanding that, hey, there are different ways of doing things. How do we reinforce that education, show that evidence, then really start changing those habits? Because enjoy the answer.
Yeah, no, and also like one thing that I also see, because for me, also tend to approach things of like why now, right? Even for us, why do we exist now? And I think there are three forces that are happening within our ecosystem in different ways. So one, our demographics are changing. So there's a shift in demographics, whereby for immigrants, they tend to be savings driven, but then in Canada, it's more credit driven, right? But then now we're in an environment whereby credit is very expensive. We haven't experienced this in over a decade. So those behaviors are also starting to adjust to the reality that it currently exists right now. So I think there's an incentive structure that probably incentivize getting credit more. That incentive structure is changing. So I think before it would make sense in a low interest environment, like, oh, hey, credit is actually a good tool to be able to build wealth because it's accessible, it's low cost, and you can be able to utilize for different things. But then in an environment whereby it's high interest, there's a credit crunch, what does that look like from an incentive structure? So do those incentives now force or incentivize or encourage different user behavior? I think that's one of our theses of like, okay, in an environment like this, whereby credit is not accessible, people start looking for alternatives, right? That's why I always believe like great companies, great products were always built in depression, whereby like people start looking for alternatives. So I think that would be probably a good time to be able to build a fintech company that's offering an alternative solution.
Yes. A lot of fintechs focus on parts of the market that are not served as well as they could be by the traditional financial sector. One question I think that I'm always curious about the answer to across the board is a customer of such a company a customer of that company for life, or do customers go on to use other financial services once they, for example, use the community wallet to build their financial profile?
I can start maybe just quick. So on one side, we didn't when we started Woveo, the vision wasn't to serve just immigrants. We had this vision, we could serve generally, the general public. This is a tool that culturally we very much believe in. It's tied to a lot of values in terms of one, supporting your fellow man, but also ensuring that that financial success is spread beyond a party of two. It has the ability of spreading and blossoming to other people. And so understanding how also we need to penetrate into the market was, I think, a bridging point of knowing, okay, how do we aim to serve the Canadian market and what products and services are of most value? I believe beginning at the foundation of rotating saving product allows us to really build that one social network that are for financial goal, and then build those individual products that, if the community is taken care of, if we're able to provide financial security to the individual at the community level, are we able now to enhance that credit access to allow them to achieve those broader financial goals? So the build up, I think, is definitely something that is laddered. Once at a foundation, you have that strong relationship, enabling that trust among community, then spreading it to the different use cases. What we see, and I guess leading to the question of culture, is demographically, we're at a point where as community or even as workers, we see a lot of individual power in the sense that, there are gig workers who maybe can work remotely, never have to work together in one location, but at the same time, making sure that, okay, is the product we're providing serving the utility in case that they have? On our level one, providing financial security to the community, then at the next level, are we able to provide that to individuals, and what do we need to do that? If we're able to provide that, are we able now to broaden wealth creation? Because that is what we're trying to gear to.
Yeah. And then I also think like it's an interesting question because in Canada, just because of the big five, fintechs tend to position ourselves as on-ramps. We're an on-ramp to this, we're an on-ramp to this, because we're just thinking like, okay, probably like we can have a customer lifetime value of 3 to 5 years and then turn this customer into this big bank or into this big credit union. For us, just in terms of focus, right now we're focusing on being an on-ramp, but our grand ambition and vision is just reimagining community banking as we know it. So I think because different different data points that we see are totally different from the financial ecosystem here. So the repayment behaviors of people who are participating in groups versus people who are doing it individually, right? How do you use those different data points in terms of cost of capital, risk assessment, credit access? So you look at different profiles. You're like, okay, hey, is there an opportunity that you can actually become a lender yourself because you have this alternative data, alternative structure that is being provided to these customers that provides a very interesting opportunity. The second piece is the lifetime cycle of how new immigrants use this rotating savings mechanism. So like James mentioned, the whole women's network that we partnered with, they've been doing this for 13 years. So 13 years. So it's no longer about like, okay, they do this to graduate into a different credit product. It's more of a financial behavior that is really tied to what they believe in terms of like keeping that community together and then providing access, because at the end of the day, people are sensitive to the interest rates that they're charged, the access to capital when they need it. And then if you're starting a business, getting credit for a business is really tough. So like keeping those considerations. I think one of the interesting story with one of our investors, when he was doing due diligence on the rotating savings, like, oh, hey, is there a market for this or will people use it? He asked one of his maids, who is from the Philippines, and told that they've been doing this for 26 years. So really it's more of a mechanism that people use for a very long time. They use it to be able to build wealth, and it's the same thing in Canada that we use from a credit union perspective. That this becomes the bank for the community or the wallet for the community over the community's lifetime. So how do we enable those communities or any community to be able to have their wallet that can enhance their financial security in terms of the booms and the busts that happen within an economy?
I love the vision. It's epic, which leads me, I think, nicely to the next question. It's hard to do even simple things in the Canadian financial sector. Does Woveo do everything by itself, or do they partner with others?
Yeah, no, definitely have to partner. So yeah, no, we partner with people from payments to compliance to KYC. Really, like as a startup, you have limited resources, but then also to build a fintech infrastructure is very capital intensive. So really relying on third-party partners, it has been what has been able to get us here. So from being sponsorship to payments to our compliance processes is all through third-party partnerships.
Mm-hmm. Yeah, and also maybe also on the other side of that, for a knowledge and capacity network building, yeah, such relationships as yourself, Alex, with the Fintechs Canada on Canadian Lenders Association have been very welcoming. But finding those ecosystem partners that are willing to accept this concept that is foreign in a lot of senses and goes a bit against the traditional FI model, having those partners who really have those conversations, understand the model, and willing to have really willing to build that out with us has been very supportive.
To the extent you can tell us, what are Woveo's future plans? Can you tell us what's on the roadmap, or what you're doing next?
Yeah, no. So for us right now, we're focused on the credit and savings component. So by leveraging individuals to build credit, but then our roadmap is actually building the whole community banking infrastructure. So another product that really ties in well is insurance. So enabling people to pool their own savings and then provide insurance to the community, especially like for things that are usually not insured in the proper manner, like businesses. Reducing that cost is something that we're looking at. But then also we'll be launching a Visa card in Q4 of this year to be able to more focus on spending of those savings. So how can we incentivize spending within communities? I think one thing that we are very particular about is, as a community wallet, how do we incentivize the circulation of capital in communities? Because you have consumers and you have businesses. Can you provide an incentive structure that keeps that community and building community wallet together? So looking at reward programs that we can be able to implement that enables community members to buy from their community businesses in a way that is seamless. So that's kind of like our vision. How do we go from credit and savings into spending, into insurance, and then have that community wallet that can be able to provide that access to individuals?
Just a couple of questions before we wrap up. These will be less about Woveo, more perhaps about you guys. What's one thing you guys know that you wish your peers, other founders, also knew?
Um, one thing I know now that I wish other founders knew, I would say, like for me personally, I would say like being really passionate. I think when you hear it from the outside, you don't really relate, because the reason why I bring that is like 90% of the days are all, yeah, scrappy days, hard days. I usually use like in every 2 weeks, I have one good day. So just being able to have that resiliency and scrappiness that you need to be able to get by and achieve that mission. So I think for me, it's more about like being comfortable with being uncomfortable. I think that would be the biggest thing, because yeah, you're going to need that for 3 years before you even start ramping up. So just really being driven and being really aligned in your mission that you're looking to achieve, and then forgetting any external validation. I think as a founder, if you're looking for external validation early, it can be a huge distraction. You can easily give up. So really just eyes focused, the whole team focused, and then yeah, I think that would be the biggest advice.
Not for the faint of heart. James, you got one?
Oh yeah, and actually, yeah, it builds on Jonas as well. And so while maintaining, one, being very clear on that focus and really what you're building and the intention, but also looking for those signals that show you, okay, what works, what doesn't work, and what needs to be improved. Having that breakdown and sticking with it with a bit of discipline, having a reflective process. I feel, one, as you said, it is a grind, and it is for the mental health. Personally, you want to have a reflective method to really be able to reset and say, okay, I'm ready to get back into it and try it again, but try it differently, because the result is what counts. And having that, having a reflective process, I feel is one of those things. Sticking to a reflective process is one thing I'd tell myself if I could do it all over again.
What's one fintech trend that is so overrated you're just sick and tired of reading about it or hearing about it? This is the shots fired part of the
I love my fintech brothers and sisters. They can do no wrong. We're all in this together.
I'll say two things for me. So I think one, because of like regulatory burden that has maintained it so far. So I just hope that we can be able to get over that, to be able to start building solutions. So from hearing it over and over again without actual solution is open banking. I think, just kind of like we've been talking about open banking for a long time, since 2019, I was getting into fintech. Now we are here 2023, 4 years later. It's just mean like, okay, how do you actually get the action to be able to improve consumer results? So that's from more like a policy perspective. But then from a technology perspective, it's crypto. Anything aside from Bitcoin, I think, it's just I think it's just more of like a trend around things that really not definitive value that can come out of it. But I do believe like Bitcoin has a solid value that you can provide to the ecosystem. But then everything else outside that, I just believe like, it's just a trend.
Plausible answers. James?
It's not something I want to see go away, but I'd love to see its implementation and how it actually turns into tangible outcomes, and it's the application of AI. So everyone's like, oh, we're using this AI model to do this, or we're using this AI model to do that. I feel explaining, would the outcome of this actually be broader access of credit? Does it actually expand people's financial ability, or is it an efficiency, or is it a business efficiency tool really improving how you work, and not the service to your actual customers and clients at the end of the day? So that is one, and especially because it comes with big spending budget as well, because it's not cheap. So that's one where I would love to see maybe some action or some different.
I would also have like I would also want to get your response on that one. What would be
you know that Jose Mourinho meme where he's like, I prefer not to speak, I'm going to get in trouble? That's my answer to this one. Jonah, James, thank you so much for taking the time to talk to me. I hope you guys had as much fun as I did.
Yeah, no, thanks for having us, Alex. I really appreciate the opportunity.
Yes, indeed. Thank you so much. It was a wonderful conversation.